out here. Yep, all right. Last few minutes, we got few minutes, last 4.5 minutes left for Fed to come in. Let's see if we got any news. I even heard a rumor on Twitter that a lot of hedge funds informed all their traders to close off their short positions, which is kind of weird if you think about it. If US dollar is supposed to gain strength, why are they closing off their short positions? Yeah. So got to be a little bit careful here.
I actually saw a weird video from, I can't even remember what was his name. He's actually a big hedge fund investor. And he said that the market was going to act really weirdly in a way that it's never acted before. Something along the lines of, we're going to have a recession, but everything is going to rally. Was basically the statement he said. And it was a very weird, like almost like a conversation piece in like 2 seconds.
Yeah, that's interesting because that aligns with what I just said. That's going to be weird. If they actually, even I think if they hike rates by 50 basis points as well, that might, I don't think it's not possible, but it's highly unlikely that would happen. But if that happens, I think, yeah, there'll be a lot of US dollar bearish momentum. It's going to be interesting. Let's see.
The question is, what's everyone drinking during the FOMC meeting?
Branch chain amino acids.
Hey.
Actually, same. I'm drinking a protein shake.
Hey, good man.
There are a lot of traders who actually get high. They smoke on some weed before the trading. I think that it calms their nerves.
Yeah.
Unfortunately, in Dubai, we don't have all of this stuff. But I would really like to try
me, man.
mushrooms.
Take the test. How you get high scores? I went for mushrooms in Wales yesterday. Well, on the Queen's funeral, I was up a hill picking mushrooms and fucking Liberty caps. Shit, just trying out now. But I've never done them before, so it'll be my first time.
Just double check they're legit.
Yeah, the sound. I even had an app. Well, I sent them to Kev to confirm it, but I downloaded this app and you like take pictures of it and it scans it and tells you what species it is. Quite fucking sick. But it's the season for it, so as soon as it gets, you've got all that high humidity and it's been raining for a couple of weeks now. It's fucking mushrooms come out. You've got major people just flocking to Wales to pick mushrooms. Help with that seasonal depression. But yeah, man, smoking and trading is great.
Yeah, this dude here is mentioning that the recession could easily drag into 2024, and he says the likelihood of recession is 99.9%.
Like a bottle of Dow. Yeah, I think we're already seeing it, aren't we? I mean, these inflations, it's hitting the poorest people in it. There's a lot of slowdown already. And it's just going to get worse as the people start trying to put the heating on in the winter and they're getting hit with mad energy bills.
Okay, last minute, I think. Let's look at BTC and gold on the 1 minute chart. Let's see how this reacts. We have just 43 seconds left here.
He jumped up a little bit since our call.
Yeah, I think this might just be a liquidity grab, but we don't know. Let's see what happens. Because you see how it broke through and found resistance there at the supply demand level. Yeah. So let's see what happens.
You see how my short played out nice there. So where it wicked on that, I was looking on the 5 minute. You've got a wick at that same area. That was a quick 1 to 3 there, easy. From when I mentioned it.
Yep. I used to do that.
What the fuck?
Holy shit! Look at that! What the?
Whoa!
Okay. What?
Yes!
Oh my god! Where's the news?
I thought my screen froze. I was like, what?
These are some big movements, huh?
Yeah. Oh my god.
This might be a proper liquidity grab. That 1 minute. Oh my! Look at gold dropping. Yeah.
Yeah.
What's going?
Oh
What's
my
the?
God.
What's the decision? What's the decision?
It's 10 p.m. now.
Yeah, it should come out now.
I just played along on BTC on MetaTrader.
Wow,
Just on that.
SPY is dropping.
SPY as well. Shit.
I'm loving this music. Who put that on?
Yeah, what's going on?
This has made this very intense.
BTC just went sub 19 now.
Where is the news?
Whoa.
Sounds like you're loading into Medal of Honor.
Oh, 75 basis point. Yeah.
Oh, okay. So
Okay.
standard.
Standard. What was expected? Okay. Now we need to wait and see if FOMC makes some
What?
statements. Yeah. Any comments or? Okay. So this is.
Have you seen BTC now?
Let's look at BT. Oh, bro! What the hell? Gold just went through my point.
Whoa.
This is too volatile at the moment.
Holy
Where is
shit.
it? There it is.
BTC just like a tapped 18.7.
Did your alert just come off?
Yeah, my alert just came off. It just crossed my entry point. But this is madness. I don't know if I'll take this because price just left a massive gap there. You see, it needs some
Yeah.
structure here for me to put my stop loss.
Oh.
And we're closer to market close in 3 hours. So let's see. You see how price is rejecting? I think this might just be a little bit of a liquidity grab. Let's see.
Wow.
Let's see.
What, before going up?
DXY. No. Before it goes, it might fluctuate in this area for a while, maybe. But
Like
I don't know.
it topped out literally a weekly resistance and just pumped.
Look, there's not much really for the Dixie to in
What the
terms
hell?
of resistance here.
Yeah, this supply demand area is the weekly supply demand area that I put out.
Wow.
How many pips did this drop? I think it dropped what 80 pips, 100 pips in 2 minutes. Yeah, not bad. Actually, not bad from the CPI report. It dropped 200 pips in 2 seconds. So
Is anything said or is everyone's just kind of
let's see what else. Federal forecast for the end of 2024 to be. Oh shit! They increased their forecast of the federal funds rate, which will be 3.9% by the end of the year. Because if you look, so this is supposed to be 3.25 today, and their previous target was 3.4% by the end of the year. But now they changed their target to 3.9% by the end of the year. So that means we are still very bullish on the US dollar. Yeah.
Oh, this is going to be heavy.
Yeah,
Like we're coming into October soon. There's not much of the year left.
Look at that, 4.6% by 2023. Bro, what the? That's crazy. I think they were
Is
expecting
that the inflation rate? Yeah.
No. This is the federal rate. They'll keep hiking the rates till it reaches 4.6% by 2023. So the previous target was 4.25%. So they increased this as well to 4.6%. Yeah. Let me activate gold again. Let's see. Oh, great. It's already going to go to my area. For me, like if this drops all the way, I wouldn't take this trade. Maybe I want to find, I would like for some form of support, like some form of structure here, some structure there. And then maybe come there, maybe give me here, and then give me a nice entry candle. That's where I take the trade.
I would like to buy some 3-digit gold. Spot.
Spot 3-digit? Oh, that'd be crazy, yeah.
Possible. Who knows how far this plays out? But you know what? Like in terms of precious metals, like silver is very affordable for everyone. So I recommend going in on silver.
There it is. It's moving.
Is this silver play? No gold.
No, this is gold.
Can you trade silver as well?
I used to trade silver, but I didn't like the spreads. The brokers would give very, very high spreads on silver.
I noticed different time of the day as well as different spreads, isn't it, on the same instrument?
Yeah, look at this
Quite
crash.
different on the Yeah.
This is annoying. I've been waiting for this entry point for a while. If this goes all the way to my TP area, I'm gonna abruptly end the call.
You didn't have an order
I think
set?
that war music back on.
No, I wanna see if price can find resistance at this area.
You want to see a retest there?
Yeah, a nice retest because I have got wrecked many times. If price would do something like this and then just flip all the way up without.
This is going to be that day where gold just goes all the way to 500 and you just miss every order along the way.
Come on. That's what happened last week. I missed entries on 1680 and then it retested when it was during Asian session. So I was already pissed last week. And now I think it's going to do the same this week as well.
This happened to a friend of mine. I think it was on Sol. Like he kept trying to catch like a resistance and it just kept rallying.
This BTC candle is crazy.
That is a dirty wick. What price are we at now on BTC?
900 almost. Yeah.
How did ETH react to that?
Oh yeah, that'll be interesting. Let's see. ETH. Oh, there you go. Same. Kind.
But sitting right at a major demand zone there. I did say earlier in the week that I think it was at 1.1 to 1.3K was a huge demand zone that it will go to soon.
Yeah.
I said that last week, didn't I?
Yeah. I think so. I think you said 1100 and 1100.
1100 to 1300, yeah.
Yeah, so I think it should come around this area here. Yep.
In the coming days, but yeah, that's some solid spot buying ETH right there.
Yeah. Where is that? Yeah, makes sense. Towards this lows. Yeah. There, gold. Why do this?
Geez, man, it's going the whole way. How many pip movement is that?
Oh man, this is like crazy. A lot of what is this? From the news drop right there. That's 150 pips in 10 minutes. 15 minutes. No, that's 10 minutes. That's crazy. That would be.
There's not much of an upper wick either. Just went straight down.
Yeah, it just dropped.
See, that was my entry there. See that little upper wick on the yellow line with the that's where I said get in the trade. That's where I would have entered before. Like literally on this call I went. See, me alert hit and I went gold short.
On that little, what's that?
You
That's
can
got a
listen
symbol,
to this
doesn't it?
call back and check the timing, man.
No, there's a possibility if you took a trade here, price like you see how BTC pumped up, it might take you out and then drop. That's a possibility that I've seen. It's happened to me many times.
On 1 to 3, I would have been out of it.
Oh yeah, if you took the
second candle.
Maybe if you took this one, probably.
Yeah.
What's your EMA set
on 1 to 3 TP at the hit. 8 and 21.
What about UMM on this chart, on that 3-minute chart you had up there? Was that your standard 7 or 8 MA?
Yeah, this is my 8 MA. I just changed the setting. I got this colorful MA. Yeah, it's basically flip. If the price flips bearish, it goes in orange, and if it flips bullish, it gives me the purple color. Yeah, the reason I did that is because sometimes I hate indicators so much that I end up not taking into account during the trades. So you see how price is pulling back like that? This is some scary shit right there. Like imagine a lot of people getting in there and getting all wicked out here. Yeah.
On a 3-minute candle. Go to the minute. I want to see the volatility of a minute candle.
There. It's finding resistance. It's finding resistance on the 1 minute, but I don't take trades of 1 minute, so it's a little bit. I can't take this here. Need to wait. I want to see price come find some kind of resistance here. On the
it looks like it is finding resistance there now. It looks like it's the beginning of it.
Yeah. Let's see if how this candle closes here.
We just need that 1-minute candle to play out for a few more minutes.
Yeah, but if you think about it, still I wouldn't have an entry because if this actually is a bearish engulfing, this doesn't make any sense, right? Because it would have to bearish engulf the whole area, and this is my TP area there. So I want to see another candle close here, maybe. Yeah, you see that dirty candle.
Has Kofi, are you Amazon millionaire now?
Oh, let's actually look at Amazon. He's gone quite. What's going on with Amazon? Oh, Amazon is dropping well. Yeah. There you
Yeah,
go.
it dropped. It's looking like it's found a bit of recovery though. Yeah, found a bit of support. Same with SPY actually. SPY has dropped down to like 380.
380. Okay. Yeah. So yeah, US dollar strength all around. But it failed to break this area there. But it's not bad though.
What's the white area symbolize?
The weekly supply demand. I think I marked this out like 2 years back or something, and I didn't change it. Okay, goal is finding resistance here at the moment, which is good. Let me see if this closes like a doji candle or something. Nope, it's choosing not to. Let's see. There's a possibility this can pull up still. This area here, the purple line, that's the daily structure point. There's a possibility price can come retest this, maybe. Let's see if there's more news that came out. Summary, is that it? Oh, so there's one more 75 basis point in effect, the next one in 2022.
And then no rate cuts until 2024.
Yeah. No rates cuts. So basically, till 2024, we might be seeing US dollar strength, and that kind of correlates with what we said, the 1980s highs. If we have still 2 years left with rate hikes, maybe we might see those highs at 1980s.
Oh,
it's all patience here now. With entries, it's all about patience.
I didn't take that trade, no.
Me, no, I wouldn't take this trade.
No, when
you
I
did?
called it before,
Oops.
no, I didn't do it, and I'm gutted I didn't do it. I don't really fuck with gold, but like my signal hit and it told me to place the trade, but I just never done it.
Let's see, that's a 5-minute candle.
I've got an alert set on me NI, and as soon as it just hits that, I just know it's ready.
Okay, let's see what this does. Okay, this 5-minute candle is looking good. Maybe I might take, if I have a nice bearish engulfing in the second candle with closure, once the candle closes, then I might take a trade. Otherwise, that's it. This is good though.
I think we're going to see some consolidation here.
yeah, it does look like it.
Does look quite good. 2 hour time frame, but this is a nasty exhaustion wick at the moment. Let's see. All right, so the 5-minute candle closed. If this 5-minute closes, gives us a nice confirmation, maybe might take this trade. Might have a 20 pip stop loss around. 20 pips. Let's see. You see how that's pushing through? Still don't like it. Let's wait.
Oh, yeah, it's broken.
A lot of people would have taken the trade from you. If you look at this 5-minute candle, it's an indecision candle there. Yeah. See how price is pushing through. Imagine I took the trade there. That's it. I'm out. What line is this? I think this is the weekly. No, this is the 4-hour structure point. Yep, that's the 4-hour structure point. Good God, look at this. It just flipped like crazy. You see that? Madness.
Yeah, it's a big. Now
Look
it's
at
probably
that.
gonna
Look at
test
that
that.
wick. That's a nasty wick.
Ugh.
Nasty. Oh.
It looks like it's pulling back into that
Yeah,
diagonal
the
trend line
structure
that you've got.
Oh yeah, this is an old weekly trend line I had on the goal chart that I put out. Actually, where is it? Let me see. You see that weekly trend line? I just been extending that trend line and it's kind of working. But it's at the moment it's retesting that structure there.
Yeah, from the breakout.
From
I
the
guess a
breakout.
rejection here would be a short.
That would be interesting. Yeah, I would like to see. This is what I wanted. As I mentioned, I want to see structure create here, and come down there, give me an entry there, and then take it. But if it's too late, I won't take it because Asian session is a little unpredictable. You see, that's a nice rejection there. Let me highlight this in a different color.
MM, are you saying that Asians are unpredictable?
Is
that what you're saying? That's a bold statement. I don't know what President Z would have to say about that.
All right, that's nice. Okay. Let's see if we have any more news that came out during this time. Is that it? Okay.
If this candle closes like this, we could see it going long again. The 5-minute.
If it closes this way, you're gonna take a trade?
No, I'm staying out of there. You need, for me, this needs. If there was another big pump now on the upside, I'd take a position around that previous entry if it tests that as a resistance.
Yep.
But
Aaron,
it
you
needs a
think
lot more volume going up. So
you think this trend line is valid? Kinda, I think. But this is given me structure here on the 1-minute time frame. You see how it's made that structure there? Lower high. See that? I don't like that.
there we go. Only on 1 minute left. The sellers just can't take over it. You've still got a lot of buyers coming in.
Let's look at the DXY. See, because DXY has also found resistance here, and it's kind of pulling back now. This is why we might be seeing this bullish momentum here. Let's look at BTC. I think Kofi's trade might be hitting profit today, possible. BTC is nasty.
Inshallah.
Yeah, inshallah. BTC is finding resistance as well here, by the way. See, it's kind of pulling up as well. Because after a big drop as such, price needs fuel, right? liquidity is fuel. So price has to pull back eventually. Like even the last week, if you remember, I was mentioning that the 1680 price broke, right? This was where I wanted to take a trade, but it ripped through, absolutely ripped through. And you see how price eventually goes back to pick up liquidity there, gives us a nice retest. And then we could have taken a trade somewhere here. This is why in a volatile event, you shouldn't take a trade unless you have a lot of confirmations. Otherwise, you just got to be patient with it. You see how it's respecting the trend line here as well. Maybe it might come up to this area here, maybe, if it does break through.
Yeah, it's still looking bullish on gold.
Yeah, this is a small time frame, but the daily, if you look at the daily wick towards the top, I think it might close under this structure point here. You see how I put daily SP and it's retested that. If it closes below here, I think that's good. But that's not a confirmation for us to take a trade.
Yeah, I think I wouldn't buy. I'd only sell here, but it's
Yeah.
I think there'll be another short tonight.
I want to see if price today's daily price closed below 1660, or at least at 1660. Then this would be bearish. But if it closes above this daily structure point here, then this is still stuck in consolidation.
We're over 50% recovery now from that news.
Yep, it's grabbing everything.
So once it gets back to that area, it's going to come back, I reckon. I'll just tap that and then fall again.
No, this is definitely going to fall, but the question is when.
Definitely, Jordan. It's kind of
that's a dirty.
I could see that if this does the next 3 candles now still bullish, I might enter the short there on the smaller one.
So the Fed have said that the strong job growth and there is low unemployment rate has been observed. What that says is that the market can still take those rate hikes. Therefore, US dollar is still bullish. Fed swaps, the swaps, they mentioned that terminal rate. Terminal rate is the maximum rate that the Federal Reserve will go to before they start reversing, before they take it easy, right? So 4.6% is what the terminal rate is. That's what it's indicating.
I think we need to also take into account that there'll need to be some form of overshooting to overcompensate before they settle.
Yep. Exactly. Yep. They forecast the GDP growth of 0.2% in 2022. And in 2023, now they changed the numbers. They're saying GDP will increase by 1.2% instead of the previously forecasted 1.7%. So slowdown of the economy in 2023. 2024 is going to be stagnant at 1.7%, which was also again forecasted at 1.7%. And in 2025, 2025 GDP as well, they dropped. They expected 1.9%, so it's at 1.8%. Yeah, so all the GDP numbers have dropped or have been stagnant. So we have not seen GDP increase. Therefore, the economy is going to get weaker for the next 2 years.
I think a lot longer than that. It's like they don't take into account the macro climate.
Yep. Yeah, especially they were transitory at the end of the start of the year. Now they're saying recession has a different meaning. Next will be depression has a different meaning.
Yeah, look, they'll be 2 years into a depression when they finally say we're in a depression.
Yep.
But I think this just comes from just severe disconnects in like the economy. They don't have enough knowledge of every aspect of it to make these calls, or enough of a bird's eye view. It's because they're so focused on a single thing, which is monetary policy. They're not involved in the macro side of things.
Yeah, exactly. They want to see the numbers on the paper make a difference, but they don't actually give a shit about the macros. So yep. What about the OPEC comment that was made this week? Even OPEC's the CEO said, even if the war with Ukraine stops, the energy crisis will happen. So that's not going anywhere. Yeah.
The energy crisis is inevitable because it's not just caused by the Ukraine war. It's caused by this. You could say it's been caused by the Kyoto Protocol. All of these sovereigns that have aligned and committed to not using any oil and gas products at the sake of like the everyday consumer, because it's their liquidity that's going into funding effectively sovereign power production. So domestic power production as opposed to buying imported fuel, etc. But I've been doing a lot of research on this because it's obviously part of work. This whole green hydrogen being the next play for Europe, it only works if everyone's on board, which is why there's been so much scrutiny of any country that kind of turns against it.
That's good because you're involved in the energy industry as well. Yeah.
Like energy is everything.
Yeah.
I think once people realize that, the market's become a lot easier to understand right now. But yeah, like
actually,
this is 3 to 5 years because everything is linked to it. You're not going to have any production. Everything is based off energy.
Yep.
Yeah, I think this is going to hit in the next 15 minutes. It'll break that trend line.
Yeah, it's still maintaining those. I don't know. I think I might, even if it drops, I think it's too late to take a trade because I think with the daily candle closure very close by, a little bit risky. Let's see. Might.
Has anyone or anyone themselves had any energy bills come in or relatives in the UK or in Europe?
My last one was high life. It was a bit.
How high?
It was a little bit higher.
Are you on a pay-as-you-go meter or?
No, fuck that, bro. No comfortable state.
I think the people that are being screwed over with these high bills are ones that are on pay-as-you-go meters. There's not enough clarity on what their
because they don't
structure
adjust.
is or their tariff structure.
They don't adjust the prices. So then they'll get on an estimated thing because they don't come around the house. They have to come out to every house and adjust it on the meter. But if they don't do it, then they just estimate your bill.
You know what? This is so crazy because this is such an outdated technique for meter measurement. This is something they were doing in Dubai, up until about 5 years ago. And then they brought out the smart meters. Like the UK is so far behind in terms of infrastructure.
Yeah. You know, I was researching.
I think this is something else about coming.
Yeah, go ahead.
I think like you can obviously tokenize in the energy as well, so you'll be able to accurately measure what people are using, so you're not overpaying for energy. And then
but that's not. You don't need to tokenize to be able to do it. It's just a digital meter. They're just not putting in the capital expense of
meters here, bro. We have them and they fucked everything up. That's when the bills went more expensive. So they were selling everyone, I'll get these smart meters, but then obviously it makes it less. It's harder to fiddle it then basically, but then also the prices were just getting slammed. Like they were overcharging people, and they were basically they get you to sign up to a direct debit, and it could be say £50 a month, whatever. But your bill could be coming in higher than that direct debit, and then every couple of months they'll be like, "Hang on, you owe us this much money," and it's happened to a few people I know where they've ended up with like thousands of pounds worth of debt because the direct debit wasn't meeting the payment of the energy, but they were never told it wasn't. So they've just let it accumulate into debt.
And if this comes down to like when you privatize critical infrastructure like that, where it doesn't become about the service that's being offered, it becomes about the capital that's being made.
Yeah, it's just crazy that people pay different rates for the same fucking energy, you know?
Well, like right now in the UK, this is everything right now that's going on is a consequence of Margaret Thatcher's decisions. Like at the time, they were good decisions, but they solved a short-term currency devaluation problem. But this is the long-term after effect of it. What they should have done is put some sort of buyback period in there where they were effectively privatizing, but then buying back into it. So they were nationalizing over a period of time.
Bro, US 30 dropped 450 pips in 5 minutes. This would have been this would be a real ride if I took this entry there. It's crazy. Aaron, I wanted to ask you about something. I'm on my free time today. I was just researching a lot about China. Yeah, that's what I do. Yeah. So we've been discussing how China might take over to be the superpower. Yeah. So I wanted to see like what's the likelihood of that, and what I was just researching is why does China why do they crave themselves to be a global power so badly? Yeah. And it just stems down to how over the last centuries they had a lot of dynasties, right? And how they've been switching around with the dynasties, and eventually the Communist Party took over. And now for them to state their claim before another dynasty comes, it crushes them. They have to become a proper superpower, and that's where they get that from. And eventually, and also, I was looking at the GDP numbers of China actually, and like what does it consist of? If you look at GDP numbers of China, and if you look at US GDP numbers, there are a lot of big differences actually. If you look at US's GDP numbers, 71% is consumption, right, and 13% is investment. But when it comes to China, it's kind of flipped. China's consumption is half of US at 35%, but the investment is at 48%. So they prop up their GDP numbers by using investments a lot. Yeah.
And this is the thing with they fixed what's wrong with socialism, and the only reason they were able to do that, or communism, was that they got big enough to do so. If you were to take like every communist country that we know today, and obviously they've been painted with this sort of evil paintbrush, but the only thing that stops them from functioning is that they've been sanctioned, and they're only sanctioned because they're communist and they don't want that influence entering capitalistic countries. That's what it's about. So they sanction them. If North Korea had access to capital in a free market, they'd be absolutely fine. It's the same with like Cuba, but it's these sanctions that end up punishing the country. So what they do is they sanction the countries in order to almost stir up the population. It's not to do anything against the governments. We saw this with Russia.
Yeah, look,
it's
it's
exactly that. It's to torment all of the people into revolting and turning the government from internally. But look, it's about creating a new dynasty, and Xi is, and the only reason why China is going to get away with this is because they have, I would say, centralized autocratic leadership. When you've got consistent party changing, you can't stick to a roadmap. You've basically got one leader going in who's making changes and another one coming in, pulling in 50, 60 executive orders to rewrite them. Another one comes in, does exactly the same thing. You don't get enough consistency.
Yeah. But
and
even
this is going to be the entry here, boys.
Oh yeah.
So if this candle here now,
look at the daily.
40 seconds on this one.
Oh, this is dirty.
The next bearish candle that comes out a good entry point, because this is going to come back flying back down in the next half an hour. So just wait for this to close, and then whoa, that's some mad volume. But
it's
again,
this
is a perfect signal for me to sell now. Just wait for the
here it makes sense. Here it makes sense for you to take long positions, but this would be counter trend long position. But this is a higher probability long position. Not if it breaks above 19, this support demand area. But if it doesn't, rejects again, which I don't think so. Oh my god, this is ripping through. I think this might go all the way to 1695. See, I have an alert here, 1695. I think it's gonna go there.
Whoa.
This is crazy. This is crazy. What's happening? Is there any news?
There's a high area of interest. What
This
the
one's
fuck?
what the fuck is?
This is perfect for a short.
No, you don't take a
Loads of
short
price
position here. This you'll get wrecked, fam. Look at this.
Oh, yeah,
This is
no,
too much
yeah.
volume. Yeah,
I'm not next bullish and I'm going in. Bearish.
Aaron, the one interesting fact was, oh, it's Powell is speaking, by the way. That's why. Wait, is Powell's speech on? Let's see.
Yeah, do you want to put it on?
Yeah, let's put it on. Where is it? Press conference.
You're just in that area now.
Where is
first
it?
minute.
Broadcasted. Oh, cannot be found. Nice. Where is it? It doesn't come here though. It comes here. Let's see. Yeah, there. Can you hear the thing? The audio?
No, you need to change your audio again like you did last time, and then go back from the beginning.
Oh yeah, it's here.
In firming the stance of monetary policy. Over coming
This
months,
candle closures confirming
compelling
now.
evidence that inflation is moving down, consistent with inflation returning to 2%. We anticipate that ongoing increases in the target range for the federal funds rate will be appropriate. The pace of those increases will continue to depend on the incoming data and the evolving outlook for the economy. With today's action, we have raised interest rates by 3 percentage points this year. At some point, as the stance of monetary policy tightens further, it will become appropriate to slow the pace of increases while we assess how our cumulative policy adjustments are affecting the economy and inflation. We will continue to make our decisions meeting by meeting and communicate our thinking as clearly as possible. Restoring price stability will likely require maintaining a restrictive policy stance for some time. The historical record cautions strongly against prematurely loosening policy.
This is bullish.
As shown in the SEP, the median projection for the appropriate level of the federal funds rate is 4.4% at the end of this year, 1 percentage point higher than projected in June. The median projection rises to 4.6% at the end of next year and declines to 2.9% by the end of 2025, still above the median estimate of its longer-run value. Of course, these projections do not represent a committee decision or plan, and no one knows with any certainty where the economy will be a year or more from now. We are taking forceful and rapid steps to moderate demand so that it comes into better alignment with supply. Our overarching focus is using our tools to bring inflation back down to our 2% goal and to keep longer-term inflation expectations well anchored. Reducing inflation is likely to require a sustained period of below-trend growth, and there will very likely be some softening of labor market conditions. Restoring price stability is essential to set the stage for achieving maximum employment and stable prices over the longer run. We will keep at it until we're confident the job is done. To conclude, we understand that our actions affect communities, families, and businesses across the country. Everything we do is in service to our public mission. We at the Fed will do everything we can to achieve our maximum employment and price stability goals. Thank you, and I look forward to your questions.
So his speech is bullish. So he said the job market is still strong, the wage growth is still there, and inflation is still high. So it's bullish, yeah?
When to slow down these rate increases and how you'll eventually know when to stop.
So I will answer your question directly, but I want to start here today by saying that my main message has not changed at all since Jackson Hole. The FOMC is strongly resolved to bring inflation down to 2%, and we will keep at it until the job is done. So the way we're thinking about this is the overarching focus of the committee is getting inflation back down to 2%. To accomplish that, we think we'll need to do two things in particular to achieve a period of growth below trend and also some softening in labor market conditions to foster a better balance between demand and supply in the labor market. So on the first, committee's forecasts and those of most outside forecasters do show growth running below its longer run potential this year and next year. On the second, though, so far there's only modest evidence that the labor market is cooling off. Job openings are down a bit. As you know, quits are off their all-time highs. There's some signs that some wage measures may be flattening out, but not moving up. Payroll gains have moderated, but not much. And in light of the high inflation we're seeing, we think we'll need to, and in light of what I just said, we think that we'll need to bring our funds rate to a restrictive level and to keep it there for some time. So what will we be looking at, I guess, is your question. So we'll be looking at a few things. First, we'll want to see growth continuing to run below trend. We'll want to see movements in the labor market showing a return to a better balance between supply and demand. And ultimately, we'll want to see clear evidence that inflation is moving back down to 2%. So that's what we'll be looking for. In terms of reducing rates, I think we'd want to be very confident that inflation is moving back down to 2% before we would consider that.
Steve.
Thank you, Mr. Chairman. Steve Leisman, CNBC. Can you talk about how you factor in the variable lags on inflation and the extent to which the outlook for rates should be seen as linear in the sense that you keep raising rates, or can you envision a time when there's a pause to kind of look at what has been wrought in the economy from the rate increases? Thank you.
Sure. So, of course, monetary policy does famously work with long and variable lags. The way I think of it is our policy decisions affect financial conditions immediately. In fact, financial conditions have usually been affected well before we actually announce our decisions. Then changes in financial conditions begin to affect economic activity fairly quickly, within a few months. But it's likely to take some time to see the full effects of changing financial conditions on inflation. So we are very much mindful for that. And that's why I noted in my opening remarks that at some point, as the stance of policy tightens further, it will become appropriate to slow the pace of rate hikes while we assess how our cumulative policy adjustments are affecting the economy and inflation. So that's how we think about that. Your second question, sorry, was?
Is there a point in time you could see pausing? Is it linear that you keep raising rates, or is there? Oh, I'm sorry. I should know better than to not talk with my microphone.
I should know better than to answer your second question.
Oh, there you go. Is it linear? Do you keep raising rates, or is there a pause that you could envision where you kind of figure out what has happened to the economy and give time to catch up in the real economy, the rate increase time to catch up in the real economy? Thank you.
So I think it's very hard to say with precise certainty the way this is going to unfold. As I mentioned, what we think we need to do and should do is to move our policy rate to a restrictive level that's restrictive enough to bring inflation down to 2%, where we have confidence of that. And what you see in the SEP numbers is people's views as of today, as of this meeting, as to the kind of levels that will be appropriate. Now those will evolve over time, and I think we'll just have to see how that goes. There is a possibility certainly that we would go to a certain level that we're confident in and stay there for a time. But we're not at that level. Clearly today we've just moved, I think, probably into the very lowest level of what might be restrictive, and certainly in my view and in the view of the committee, there's a ways to go.
Okay, Rachel. Hi, Chair Powell. Rachel Siegel from the Washington Post. Thank you for taking our questions. The projections show the unemployment rate rising to 4.4% next year. And historically, that kind of rise in the unemployment rate would typically bring a recession with it. Should we interpret that to mean no soft landing? And is that kind of rise necessary to get inflation down?
Right. So you're right. In the SEP, there is what I would characterize as a relatively modest increase in the unemployment rate from a historical perspective, given the expected decline in inflation. Now, why is that? So really, that is what we generally expect, because we see the current situation as outside of historical experience in a number of ways, and I'll mention a couple.
Guys, so he's just going on about what he just said. He's bullish on the dollar, and just like how he mentioned in the Jackson Hole speech about how the dollar will get stronger and will keep hiking rates. That's what he's reiterating, yeah, that is going to keep on hiking. So US dollar still remains extremely bullish. At the moment, we're seeing a little bit of a pullback here. Yep, I think this conference might go for a while. Yeah, so I don't want to keep you guys here unless you want to stay. Any questions regarding this?
No, I think a lot of the points there were clear. I think a main one there was obviously not changing anything or from Jackson Hole as well.
Yep.
That would kind of imply that that was already priced into the market.
Yep, exactly. And he also mentioned history warns them that they should not prematurely drop interest rates. Therefore, he's still extremely bullish. Yeah. I think we will see. Well, by the way, look at this gold candle here, the 1 hour candle. That's imagine if you were stuck at the bottom of this wick. You see how price ripped through, what is it? Fuck, 350 pips. That's mad. So yeah. Any questions regarding fundamentals? Do you guys understand fundamentals till now? Like, has it clicked in? Yeah, Michael or Kofi? Let's look at Kofi's trade, by the way.
Oh, not going so well.
Oh, bro, this is just ripped through. Shit.
It's literally done a complete reversal.
I think you should maybe close half of your position. Maybe.
Yeah.
Should have closed half of the position and bought your stop losses to somewhere inside this range.
Yeah, I definitely should have. Still in profit, but just not as much profit. But yeah, it has, especially Amazon. Oh wow, even Amazon's gone up. But yeah, still. Oof.
Yep, that's a big wick there.
Yeah, very
big wick. That's very big. But gold, I bet gold has wrecked so many people. I think Kev just messaged me as well. He said he got wrecked by gold. Apparently he FOMO'd at that 1660 area that we've been looking at.
In describing the policy destination, there's still a way to go. But I imagine you have to have some idea about how you're thinking about your destination, whether it's a stopping point or a pausing point. And so I was wondering if you could discuss how you are thinking about, as the data come in, where that destination is, how it's moving up if inflation doesn't perform as you expect. Do you want to have a policy rate that's above the underlying inflation rate, for example? And do you have an estimate for where you think the underlying inflation rate might be in the economy right now?
Well, so again, we believe that we need to raise our policy stance overall to a level that is restrictive. And by that I mean is meaningfully putting meaningful downward pressure on inflation. That's what we need to see in the stance of policy. We also know that there are long and variable lags, particularly as they relate to inflation. So it's a challenging assessment. So what do you look at? You look at broader financial conditions, as you know. You look at where rates are, real and nominal in some cases. You look at credit spreads. You look at financial conditions indexes. We also, I would think, and you see this this is something we talked about today in the meeting, and talk about in all of our meetings, and you see this, I think, in the committee forecast. You want to be at a place where real rates are positive across the entire yield curve. And I think that would be the case if you look at the numbers that we're writing down and think about, you measure those against some sort of forward-looking assessment of inflation expectations. I think you would see at that time, you'd see positive real rates across the yield curve, and that is also an important consideration.
Howard.
Hi, Howard Schneider with Reuters. Thanks for
yeah, so guys, he's just repeating himself. I think every time he says inflation, you guys should take a shot. Take a shot every time it says inflation. All right, guys. I think we're done. Any questions regarding anything we did today? All clear?
No, all
Yeah?
good from my side.
Perfect. All right.
All right. All good.
All good, yeah. All right, all right, boys. Then take care, everyone. Yeah. Let's
Take care, everyone.
yeah, let's meet on technicals on Sunday. All right. Good night.
All right,
night.
nice one.